So this is the starting of the video, and this is the disclaimer. So this video course is created solely for educational and awareness purposes. I am not yet SEBI registered. So I'll get my SEBI registration. I am pursuing multiple courses and certifications to get my SEBI registration. So it will take around 1 to 2 years because I'm from a non-finance background. So I have to pursue a lot of courses before I become SEBI registered and I can officially give advice on buying and selling. So till then, this is just for solely and education and awareness purposes. And if you plan to use any of the strategies, please use your own discretion. Understand that there are risks associated with stock market. Happy with the beginner's course, you can buy my intermediate course, which mainly consists of swing trading. What does swing trading means? You will buy stock at low price and you will sell it at a high price. Sometimes it takes few days, sometimes it takes few weeks, sometimes it takes few years. But in the end, the entire concept is you will buy stock at low price and you will sell it at a high price. So in this, I'll be teaching you technical analysis and swing trading and then fundamental analysis. Okay. So first you want to buy a stock on your own. So you need to analyze the company. How is the company actually really doing? Is it really making profits or is it faking its profits? Will it make profits in the future? Okay, it's making profits now, but will it make profits in the future? And beyond that, okay. So for this, you need two things. If you want to individually buy stocks on your own, you need to understand two things. One is the stock really good? That is fundamental analysis. Second thing, even if you find a good stock, you need to find the right price to buy. If you buy at a higher valuation, it may get stuck. It will not like fall or it may bounce around there, but you may get stuck in that price. Okay. So you also need to invest in the right price. This is clinical analysis. Okay. So how to analyze the company? There is the 25-point checklist and we'll be using ChatGPT. So what is the 25-point checklist? So I have taken multiple business classes and courses on my own, and I have read a multiple lot of books to understand how to properly evaluate a company. And using that, I have created a 25-point checklist. Okay. Now, understanding all of the points in checklist will take around 4 to 6 weeks, roughly. I mean, all Sundays. So it will take around roughly, I'm estimating 4 to 6 weeks, and then you will understand all the points in the 25-point checklist. Then after you complete it, what will happen is, so before this, what I'm explaining, analyzing a company is fundamental analysis. Before you buy a car or a vegetable or you go to a hospital or hotel, you check ratings, right? You check even vegetable. If you want to buy, you'll check if it's good or not. But when you're investing a stock, you'll be investing because somebody told you or because it's rising. No, you should first understand the fundamental analysis. What is under the hood of the company. Okay. For example, I'll explain. Okay. For this, you need to understand the balance sheet, ratios, and profits of a company. For example, let us take the example of Zomato. In the stock market, it is called Eternal Limited. Recently, what happened? Zomato's price started rising a lot, and many people are pouncing on it to buy. So I'll show you the price rise. See here, this is Eternal. This is the timeline x-axis, and this is the y-axis price. So what happened? It went from in 2023, it was trading around 50 rupees. Now it is 350 rupees. So 5 times return, 7 times return, 5 7 are 35. So the huge return here. Okay. So now what happened here? What was the reason for this? The reason for this is company showing profits. Now let us see under the hood. This is the I'm using a website called Screener to show you. So in this profit and loss statement, so this is year on year. Okay. So we are going from left to right. That means we are going from 2018 to 2025. Now see here, profits initially were negative. Okay. And then suddenly what happened? The profit started slightly increasing. Suddenly we had positive profit. And that positive profit has grown so much, 697. Leave this one. This TTM is next year. Okay. We'll see only till here. Now what happened? On paper, the profits are going from negative to positive and from positive to high. Right. So that's why the price is rising. And then what happened? Net profit also is rising after taxes. Now let us see the fundamental analysis here. So now here you need to understand that the uh, go a little up here. Okay. And see here that there is something called other income. Okay. And there is something called operating profit. You see, operating profit is little rising. It's not like it's not rising, it's rising. But the other income, look at the other income. So here it was 21 crores. And then if you come here, it is 1000 crores. Okay. If this 1000 crores was not there, finally, this will also be negative. Okay. Because of this 1000 crores, that's why the 600 crores is coming to be 500 crores. What is this other income? For this, I had to understand and I had to get annual report. Okay. If you click on it, it will show exceptional items. Okay. These exceptional items, interest, depreciation, these are the things that are increasing. Other income, normal. Okay. These four things are contributing the 1000 crores. Now, what are these 1000 crores? Where is this 1000 crores coming from? So I went to their annual report. This is something that every company listed in the stock market releases. Every year they release. In this other income subheading, we can see that the money is coming from bank deposits, bonds, government securities, and there is something called income tax refund. And all of this added together, fair value on mutual fund units. Okay, so they made a profit on mutual funds, and then so companies also invest in mutual funds, and then they made this 1000 crores, nice round profit. Now, where is this money coming from? So basically, what happened? Zomato went IPO. So when you go for IPO, you get a lot of money. The owners get a lot of company money. The company gets a lot of money. That money, what did they do? They went and put that in FD. Okay, fixed deposit of bank, and then that FD is giving money every year. So now, is that wrong? No. What you need to understand is something called operating profit. And what is operating profit? So Zomato makes money a lot of ways, but the main money comes from the when you open that Zomato or Swiggy, any app, if you open, there's a restaurant, right? And then the not all of the restaurants that you know will be listed. So for a restaurant to be listed on that app, they need to pay some money. Okay, so they will be listed on the app. So that is the primary source of income. That is called the operating profit. So if you make money by using the actual business, that is called operating profit. Anything else you try is other income. So any company to make profit, for example, you are a radiologist and you have a center. If you make money from your diagnostic center, that is operating income. But you may sell by lands also. You are making money from there, that is other income. So the important thing is for a company to be actually profitable in future, it has to make money from the operating profit. A radiologist will grow in life only if he makes money. That's a bad analogy, but anyway, for a company to make money, it has to make money from operating profit. Okay, not from other income or anything. That way, the company won't grow. So here, what happened? The money is coming from other income. So Zomato has two distinct income streams. One is from its food delivery, Blinkit, and other dining operations. Other income is from interest. So they are making this 1000 crores from other income. So this income is not coming from Zomato's food delivery or dining business. Okay, this is not sustainable growth. It's passive income. It's not operational. So for a company to be profitable in the future, not today, it has to make money from its main core business. Okay. So these 2 points that I have discussed. First thing is company should have profit. It should make profit year after year. And the profit should come from not from other income. It should come from operating profit. Okay. All of these points are 1 point in my 25-point checklist. So each point has subsections. Okay. If the monkey, for example, Zomato, this will be 0. Why? Because operating profit is not rising. Money is coming from other income. So this will be counted as 0. Okay. So now what happens after you clear the course? I'll give you this one, fundamental analysis handbook. This fundamental analysis, and then you have to open ChatGPT, put that in that, and then ChatGPT will take the handbook, and then type analyze Zomato stock or analyze whatever stock you find. Okay, and then give me a score. Okay, every how to give the score, everything is in that handbook. So ChatGPT will understand how to create that like this. So score for Zomato is 11 to 30, 44 to 50%. Anything less than 50%, don't buy. Okay. So it also gives its interpretation of what is happening here. So basically what happened is Zomato is scoring less than 50%. Once Zomato makes money from operating profit more than the other income, okay, maybe 4 or 5 years down the lane, then the score will increase. Then you can invest. Okay. So basically what you are doing is you are putting a filter and then you're pouring water and all the fundamentally bad stocks will get filtered out and then you will get only the good stocks. And then by using ChatGPT and 25-point checklist, even if you don't understand all the 25 points in I can just give the checklist and then ask you to use it. But the thing is, I want you to understand what those 25 points are. Like I told you, right? That's one point. The profit thing that I told you, a company should make money from operating profit, not other income. And then that profit has to increase for a company stock price to rise. So right now, I will not will Zomato price not rise? It will rise. Okay, but I won't invest because it is coming less than 50%. Okay, so we only invest in fundamentally good stocks, not for today, for tomorrow, day after tomorrow. Because once you buy a stock, you'll hold it for long term, right? So then that's how we use ChatGPT and worksheet together. Okay, now you have identified a stock, for example, and then score is coming good. Now you have to identify the correct price where to buy. Okay, so for this we'll be using something called so these are the points, and you get the stock, and then we understand technical analysis. That is the right price to buy. Okay, so this is the entire course duration. All will be Sundays, and each class will take around 3 hours each to understand all the points. So first 4 to 5 weeks will be understanding the checklist, and then 2 to 3 weeks will be for the uh, technical analysis. This one. So there are multiple technical analysis. What I'll be teaching is price action and supply and demand trading. Okay, so this is one of the famous. So I'll not be teaching indicators. I'm explaining why I won't be teaching. So moving averages are one of the most commonly used technical indicators to understand which price to buy. So for this, I'm taking one simple moving average. So now we have to make some adjustments to it. Right now that you can see there's already a green line there. Now I'm creating the red line. This is called a 200-day moving average. The green line is a 21-day moving average. So I'm just showing you how we change the data to create a moving average. Now I have placed it to 200. It has become a 200-day moving average now. So now here, whenever the green line is crossing the red line, you will buy. And whenever the red line is crossing, you will exit. So for example, here green line has crossed right above the red line. That is where you will buy. Where the red line crosses the green line, you will exit the stock. Okay. So here, right now, we are in buy mode according to the indicator. Okay, if you go back and back, you can see everywhere, wherever the green line is above the red color line, the stock is in profit. Now I change the timings to show you multiple points of entry. So here you'll enter here, you'll exit there. Okay, it looks nice, right? So now you can enter. So basically at this level, if the green line crosses, you can enter. So what's the problem with this indicator? Let us see. So how is the formula? How is this calculated? So what they do is every day's price they will take for 21 days. Okay. And then they average it by 21. If it is 200-day moving average, it will be P1 plus up to P200 price of the stock on the 200th day, and then divide it by 200 to get a price. Okay. So for example, if all the last 25 days the price come into 42,000, you will get 2,000, and the 21-day moving average will be at the 2,000. Okay. Now what you need to understand is, for example, suddenly the next day price is zero. Now you enter zero in that one. Now your average will fall down 1900. So what happened? Did the price move the indicator, or did the indicator move the price? Now you inputted the latest price, right? You inputted zero. That's why the indicator fell. If you hadn't put that zero, it wouldn't have predicted that price will fall. So what you need to understand is the price is moving the average, not the other way around. When you go back and see, you will see nicely red green will be crossing nicely, because that is already the price has been entered. But in the future, what happens? The price will move and then the indicator will move. But in microseconds, you won't see the difference. So unless you enter a new price, the indicator won't move. So people back test and they see like, see the moving averages are crossing. That's why we can buy here, we'll exit there. But in reality, what is happening is, if I hadn't entered zero, the indicator would not have moved. So that's why when you back test, it will work. When you forward test, it won't work. Now there are complex indicators like relative strength index, Ichimoku cloud. There are a lot of things. They use complex formulas. For example, Ichimoku cloud, it uses such a complex formula. Highest high, lowest high, then this one, this one, this one, this one, and it gives a graph. Okay. So in the end, it needs the latest price to be entered for it to move. Okay. So there is nothing like bad analysis or good analysis. Okay. Technical analysis. There are multiple, it's like buffet. You can take what you want. For example, you go to a buffet and there are a lot of items, right, in a buffet. You won't be taking everything. You'll take what you like and you. What I like is price action strategy. Price action strategy mainly behavioral analysis of the buyers and sellers. I'll tell you. So we will be using both price action and supply demand trading. So what is supply demand trading? It only concentrates on 3 points. There are buyers and sellers in the market. They can be anyone. They can be mutual funds. They can be foreign people. They can be whoever they want. Even the company owner will be a buyer. Okay, all of them will be buyer. All of them will be seller. If the buyers are more than the sellers, then the stock price will rise. Okay, and the sellers are more than the buyers, then the stock price will fall. If the buyers are equal to sellers, the stock price will stay at the same level. So we use behavioral analysis to predict the stock market return movements. So there is something called insider information in stock market. So for example, if Zomato is to make a loss or profit, or it is buying some new company in the next few months or years, so there will be some people who will know this. Okay, and then that is called insider information. So what happens is people will start buying before the news comes to us. Okay, it's not like only one stock. I took Zomato as an example, but in reality, what happens is a lot of people have privilege to very like price sensitive data they will have even before we know. Once it comes into the news, we will know. But some people will have data before the news, so they start building up positions before we see. Okay, that's when the buyers will start increasing than sellers. Okay, so this is how we try to predict the behavior. And then once you understand the buy point and the exit point, once you understand my strategy, you will understand where to buy and where to sell, and then we'll spend little time on that. But once you are done, you will not like sit on the computer and wait for the price to come there. Okay, what you will do, you'll just put an alert and alert will come, you will buy the price, and after you buy, you just click this one. This is called a GTT order. Okay, GTT order, good will trigger. What you do is, for example, in this case, what they are doing is they are giving the commands to the computer. Okay, you sell right now, it is 486. They are giving a command to the computer. You just need to enter these two price points. Okay, for example, here they want to exit at 510 stop loss. I'll explain stop loss also. And then this is the price they wanted to exit. Okay, so these 2 points you'll understand what to place. Once you place, the computer will automatically sell. You need not look at it. It will only sell. Okay. So for example, this is called stop loss. For example, this is Praj Industries. Praj Industries stock started falling. So we'll place something called stop loss. So once the price reaches this level, you will exit. No, see, because you didn't exit it, for example, you didn't exit there at the stop loss level. And what happened for Praj? It went from 800 rupees to 480. So this is called something called stop loss. So we are stopping the loss before it becomes huge. So we'll exit the share before it falls huge. This is called placing a stop loss. So now I am telling you theory of probability. What is the theory of probability? So how I trade is 1:3 risk reward ratio. What does that mean? So if I want to, for example, I have 10 lakhs and I am investing in 10 stocks. I'm putting 1 lakh in each stock and I am placing GTT order. How am I placing a GTT order? I'm placing GTT order such that the loss is 10,000 and the profit is 30,000. So what does that mean? Computer will look at that, and then whenever the price reaches 10,000 loss, it will exit. Stop loss is hit, it will exit. Okay, or it will exit at one point when the stock rises and the price reaches 30,000 rupees profit, and then it will exit. Okay, you need not look at the market at all. Computer only will do. Stock price, if it stays at the same level, nothing will happen. If it falls, you will exit before at 10,000 loss. And then if it goes up, you will exit at 30,000 loss. Not you, the computer, the app will itself will exit. Okay. Once you enter the GTT stop loss and profits. So for example, there are five wins and five losses. For example, you bought 10 stocks. That five went into loss and five went into profit. How much money will you make on profit? You will make 1.5 lakh. Okay. 5 into 30,000. Okay. So 5 into 30,000 is 1.5 lakh. And then loss, same. You had five losses, but you exited 10,000 rupees loss, right? So that will be loss will be 50,000. Finally, how much is the profit? 1 lakh. How much was the return? 10%. Okay. You just place the GTT order. You did not even look at the market. Computer only will exit. Okay. Now let us say if the losses are more than the profit. For example, take the extreme case. You bought 10 stocks. Okay. After doing all the fundamental analysis, technical analysis, everything, you have finalized the price, you have put entered everything. Finally, what happened? Unfortunately, seven stocks went into loss. Only three stocks made profit. Now, how much profit you'll make on three stocks? 90,000. 3 into 30,000. How much loss you'll make on the seven stocks? 70,000 loss. Okay, so 90 minus 70,000 profit 20,000. So 70% loss, 70% trades of went into loss, but you still made some money. Okay, but this money will go into something called brokerage charges. So it will be like no profit, no loss. If you are wrong 70% of the time, this is called probability trading. Okay, this is what I'll be teaching you. So this is how the scenario looks like. You have 10 lakhs capital. You're putting 1 lakh in each stocks and you're placing GTT. How did you get these 10 stocks? You ran them through the fundamental filter. I'll teach you where to get the stocks also. So you ran them through the fundamental filter, you got 10 stocks, and then you ran them through the technical analysis, and then you got the price to enter, exit, and stop loss. Three you will get once you understand the technical analysis. You entered them all in the computer. Finally, what happened? The computer will get one command. Every 1 lakh you exit when the loss is 10,000. You exit at 30,000 profit. So all of these scenarios you are making profit always. Okay, so this is called probability theory, probability trading. Okay. One thing you need to understand is, for example, some fundamental analysis you have done, ChatGPT has given score of 90. Does that mean that the stock is invincible? It will never fall. One thing you need to understand is there are external factors which affect the market. For example, recently, if you see, Trump has created new policies. I don't know if you are following this thing. So he has put a lot of restrictions on visas for Indian IT people, and artificial intelligence also has come and has disrupted the IT stocks. So if you run the IT stocks through the fundamental analysis filter, you will get score of 90 because they're all doing well. But right now they're all in loss. Why? Because why are they in loss? Because of some external factor. Okay, the Trump factor, artificial intelligence. These are the factors that are responsible for this. So right now I won't be investing in any more IT stocks if I were invested. So I'll wait for them to. What they are doing right now is they are like taking jobs of all of the non-essential people, and they are shifting to AI. They're doing a lot of stuff. They can survive. Basically, with a score of 90 means they can survive. Okay, shocks, but then they have to survive. That's the thing. We have to see how many of them will like start making profits after all this Trump factor and artificial intelligence fiasco. So even in this intermediate strategy, we are creating a three-pronged approach. Okay, first thing we are investing only in the good stocks. Okay, more than 50 score should be there to invest. First thing. Second thing, we are using technical analysis to find the right price. Not every price is right. Okay, so we enter the price when the supply is more than the demand. Okay, that is the price where we enter. And then after entering also, we'll put something called stop loss and 1:3 risk reward ratio. So that even if 70 stocks also you have bought, you have done your homework, but somehow everything went wrong and you hit 70 loss rate. Matlab you bought 10 stocks, in that 7 went into loss, but still you'll have some money. That's the thing. That's the three-pronged approach.